Yeah, I think the deflationary risk in China remain a key concern of global investor because this has been not just reflected in some of the earnings number of multinational corporations that reflect the China sales has come in weaker than expected. I think more importantly, we have learned from the latest high-frequency data coming out from China that domestic demand remain pretty subdued. I think the most striking data point is the contraction of renminbi loan in China, because this reflects corporate and household demand for credit remain lackluster. So I think that the government actually need to focus on more demand side policy stimulus on top of the current supply side policy support. Because the key is to restore business sentiment and consumer confidence.
Yeah, so do you believe that once we do see any sort of signs of that, that could be a catalyst for some meaningful upside when sort of global investors will feel a little bit more confident about investing in China?
Currently, we still maintain our neutral tactical positions in China and Hong Kong equity market, and this is reflecting the uneven recovery outlook. So the key drag on the Chinese economy remains the property sector downturn, and is reflected in the contraction in property investment and the pretty weak activities in property transaction. This have a much broader impact on the whole real estate value chain. And this would also have spillover effect on the domestic consumption outlook, because the negative wealth effect has been filtering through to impact retail sales performance. So I think in the coming months, the market will likely stay range trading. I think for the Hong Kong equity market, there are additional capital market reform driver, including the further expansion in the Stock Connect scheme and the China southbound liquidity inflow into the Hong Kong stock market remain pretty stable. But for the domestic Asia market, the negative earnings momentum has been a key concern for the domestic institutional and retail investor. So we would wait for further sign of a stabilization of the macroeconomic momentum, and if the government spending in infrastructure, in technological upgrade can have more visible impact in reviving manufacturing and investment growth, that would also help to stabilize the corporate performance. But I think it will take a bit more time for the deflationary pressure to diffuse.